We are covering these 8 top stocks with big percentage gains today. Our review on IXHL. Incannex Healthcare Inc. is a clinical-stage pharma company diving deep into the world of medicinal cannabinoids and psychedelic therapies. Their pipeline is stacked, 28 R&D programs, 6 clinical trials in progress, and a focus on some heavy-hitting conditions like sleep apnea, brain injuries, inflammatory diseases, anxiety, and even addiction. So yeah, they're not just dabbling, they're going big on reshaping treatment across multiple fronts with novel science. Now, let's talk about that insane move in the stock. Up 70% on the day, with a 105% breakout just during power hour? That's some serious momentum. We didn't get a direct headline to pin this on, but when a move like that hits this hard, it usually signals growing speculative interest or chatter behind the scenes. Maybe traders are front-running some potential trial results, or there's renewed buzz around the psychedelic medicine angle, which has been heating up again lately. For a clinical stage company like Incannex, it doesn't take much to ignite this kind of rally, especially if investors think a major catalyst could be around the corner. It could be excitement around one of their psilocybin programs, or maybe traction on the cannabinoid sleep apnea drug. Whatever it is, this kind of price action brings the spotlight back to a very speculative but very high upside name. Definitely one to keep an eye on in the coming sessions. These parabolic moves tend to come with follow-up headlines or filings. Our review on SXTP. 60 Degrees Pharmaceuticals Inc. is a specialty pharma company that's laser-focused on infectious diseases, the kind of stuff that doesn't always get a lot of spotlight but can have serious global impact. Their bread and butter has been malaria, specifically with their lead product Aracoda, a tefenoquine-based drug designed to prevent malaria in adults. But what's interesting about this company is they're not staying in one lane. They're actively working to apply that same core compound, tefenoquine, across a much broader range of diseases, including tick-borne illnesses, viral threats, and even fungal infections. And today, they took a major step forward by signing a patent license agreement with Yale School of Medicine and Yale School of Public Health. That's a pretty big deal. This partnership is all about pushing tefenoquine into a new indication, babesiosis. For those not familiar, babesiosis is a tick-borne disease, kind of like Lyme, but it hits your red blood cells and can become very serious if not caught early. Right now, if a patient progresses past those early mild symptoms, there aren't many solid treatment options available. That's where tefenoquine could come in, not just as a treatment, but potentially as the first preventive therapy for babesiosis. So yeah, this isn't just a research announcement, it's a strategic play that signals growing institutional confidence in tefenoquine's potential beyond malaria. You've got a well-known academic partner in Yale, you've got a disease area with unmet need, and you've got a compound that already has FDA approval for a related illness. That's a solid recipe for value creation if the clinical and regulatory paths line up. Now, let's talk about the stock. Investors didn't just notice, they piled in. The stock jumped 59% on the day with a breakout surge of 60% right at the open. That kind of price action suggests this wasn't just your average headline. This was a catalyst. And it's easy to see why. With infectious disease threats continuing to rise globally, especially ones like babesiosis that are under the radar but growing, there's clearly a market opportunity here. For investors, this move is more than just a spike. It's a signal that 60 Degrees is evolving. They're going from a niche malaria player to potentially becoming a broader infectious disease company with meaningful partnerships and first-mover potential. Definitely one to watch closely as this collaboration with Yale unfolds. Our review on AGH. Aureus Greenway Holdings Inc. is one of those lesser-known plays in the leisure and recreation space that's quietly doing something kind of charming. They run 2 large public golf country clubs down in Florida. We're talking about full-service recreational spaces, 13,000 yards of fairways, clubhouses with food and drink, pro shops, aquatic golf ranges, you name it. It's a diversified operation, too. They've got their hands in golf recreation, memberships, retail gear, food and beverage, and all the extra services that come with country club life. Now, today's stock action definitely caught people's attention. Shares popped nearly 48% during regular hours, and it kept the energy going with a breakout of about 50% in after hours. That's a strong double move, and for a company like this, with a niche business and not much chatter, it's the kind of spike that gets traders and small-cap watchers circling the name. But here's the twist. Toward the end of after hours, that heat started to cool off. The stock pulled back a bit, which could be a sign that some of the early hype may have been a bit speculative. No headline catalysts dropped during the day, at least not publicly, so this move could have been driven by momentum traders or chatter in retail circles. That said, anytime you see a stock in a sleepy sector like this spike and then wobble late, it's worth keeping an eye on for either a follow-up announcement or some kind of deeper narrative, like a business expansion, a possible real estate angle. Remember, they sit on nearly 300 acres of Florida property, or even a pivot into something new. Right now, it's a story to watch. Maybe this was just a quick trade, or maybe something's brewing behind the scenes. Either way, investors are clearly starting to pay attention to a company that's been flying under the radar. Our review on JZXN. Jiuzi Holdings Inc. is a small but intriguing player in China's fast-evolving electric vehicle space. They run a network of NEV retail stores. Those are new energy vehicle showrooms, under the Jiuzi brand, focusing on selling EVs and plug-in hybrids, mostly in China's 3rd and 4th-tier cities. So we're not talking Beijing or Shanghai, but more of that grassroots push into smaller cities where EV adoption is still ramping up. They also franchise these stores out, so there's a bit of a scale play to their model. Now, today's move, up 47%, definitely raised eyebrows, especially considering the volume was pretty light, just 817,000 shares traded. That kind of low-volume pop always has the something's brewing vibe. We didn't see any official news or filings hit the wire, which makes this kind of jump feel like it could be fueled by speculation, retail chatter, or maybe even anticipation of something dropping soon. With a microcap name like this, especially one in a high-conviction theme like EVs in China, it doesn't take much to spark a run. And in Jiuzi's case, any whispers of expansion, franchise growth, or partnership deals could easily light the fuse. That said, without a confirmed catalyst, moves like today's can also reverse just as fast as they appear. So while the 47% surge is eye-catching, investors should keep in mind that these kinds of trades on thin volume can be pretty volatile. Worth watching for follow-through or maybe even a surprise announcement. Until then, this feels more like the market tossing Jiuzi something might be coming nod rather than reacting to hard news. Our review on Vee. Vee PowerCats Co. is one of those under-the-radar marine companies that's actually doing quite a bit under the surface. They design and build power catamarans, those wide, twin-hull boats, for both recreational and commercial use. Think fishing trips, diving expeditions, water sports, and even eco-tours. Now, today's move, up 43%, comes right on the heels of a 1-4-10 reverse stock split, and that's where it gets interesting. Usually, reverse splits are met with a shrug or even a bit of pressure, especially in microcap land, but Vee clearly bucked that trend. Not only did the stock surge, but it came out the gate hot, with a 60% breakout at the open before settling into that 40% plus range. That kind of price action tells you something more is going on under the hood. Reverse splits are typically a housekeeping move, get the share price higher, often to maintain listing compliance. But sometimes, especially in small caps, a reverse split can reset the table for bigger plans. Maybe it clears the path for a raise, a potential uplisting, or just puts the stock back on the radar of funds or institutions that don't touch penny names. Also, with the electric boat angle through Forza X1, Twin Vee has a foot in the EV-adjacent watercraft space, which could easily catch fire again with the right catalyst. If you layer in a cleaner cap structure, some strong open momentum, and a market that loves a good speculative turnaround story, you get a day like this. Still, the move feels more technical than fundamental for now. No new filings, no big news, so it's something to keep an eye on in the days ahead. Could be a short-term pop, or it could be the start of a repositioning narrative. Either way, Twin Vee just jumped back into the spotlight. Our review on CAPS. Capstone Therapeutics Corporation is an interesting one. Despite the name that might make you think biotech, this is actually a materials distribution company now, operating through its subsidiary Total Stone. They distribute masonry stone products. Think the kind of stone you'd see in residential and commercial construction. Now, today's stock move, up 39%, definitely caught some eyeballs, especially because the volume was super light, only about 378,000 shares traded. That kind of price pop on low volume usually means the float is tight, so it doesn't take much buying pressure to create a major move. But when a stock like this starts moving without any flashy press release or obvious catalyst, it often raises the question, what's bubbling under the surface? Sometimes these kinds of moves are speculative, traders sniffing around for a potential deal, restructure, or even a sector rotation play. Other times, it's just a low-float stock getting momentum attention. What makes Capstone interesting is that the market seems to be slowly rediscovering it after flying under the radar for a while. They're operating in a very traditional, tangible space, supplying the literal building blocks for construction, which could be appealing right now if you're looking at steady, real-world businesses. So while today's 39% spike looks flashy, the light volume and lack of clear news suggest this may be more of a setup move than a fundamentally driven one. But hey, in these kinds of names, it only takes a spark, whether that's an earnings surprise, a business update, or even just sector momentum, to keep the rally going. Worth keeping on the radar to see if anything bigger develops. Our review on SPPL. SIMPPLE Ltd is one of those names in the proptech world that's quietly been building some pretty forward-thinking stuff. They're all about helping building owners and facility managers automate the not-so-glamorous, but absolutely essential day-to-day operations like cleaning, surveillance, maintenance, and more. What's cool is they're not just offering software. They've created an entire ecosystem with IoT sensors, AI-driven workflows, even robotics handling janitorial and security work. So it's like turning a building into a smart building without needing a full teardown. Today's 37% jump in the stock? That definitely stood out. There wasn't any big flashy headline driving the move, but sometimes that's exactly when these kinds of stocks start running, quietly building momentum under the radar until retail traders or algos take notice. SIMPPLE sits in that sweet spot between real-world utility and tech upside, which can be really appealing in this market, especially with investors starting to rotate back into names that actually build things or solve tangible problems. With the company's focus on automation and AI integration in infrastructure, a theme that's getting more love lately, the rally could be a sign that the market's starting to wake up to their potential. Could be traders front-running earnings or speculating on a new deal. Either way, the move puts them back on the radar, and with a name like SIMPPLE in the proptech and smart facility space, sometimes all it takes is one partnership announcement or government contract to really shift gears. Something to keep an eye on. Our review on our REVB. Revelation Biosciences Incorporated is one of those under-the-radar clinical-stage biotech names working in a really interesting space, the innate immune system. So rather than going after the adaptive immune response like most conventional therapies, they're trying to dial in treatments that modulate the body's first line of defense. Their secret sauce? A synthetic molecule called PD, which targets TR4, essentially trying to give the immune system a controlled boost right when and where it's needed. Think surgical site infections, kidney injuries during heart surgery, and chronic kidney disease. That's the kind of stuff they're targeting with their Gemini platform. Now, the stock jumped 36% today, and while there wasn't any huge PR or announcement behind the move, this kind of run is often a sign something's bubbling under the surface. With a pipeline like this, addressing real, high-need problems, it doesn't take much to get traders or small-cap biotech investors circling. One bit of positive preclinical data, a patent approval, or even whispers of a partnership could be enough to spark this kind of move. Biotech is always high risk, high reward. But when a company like Revelation gets a wave of momentum like this, it usually means either someone's betting on upcoming data or the float is just that tight and one spark lit the fuse. Definitely a name worth watching closely, especially if they've got any clinical updates or conferences coming up on the calendar. Please subscribe, give the video a like, and watch more from our playlist. Thanks.